Hi, everyone. Good afternoon. Very nice to see a crowd here after lunch. It was a very interesting session this morning, and we've got a full panel of interesting people to speak to you. I was just commenting to my friends and colleagues in the audience just now that I was in the talk this morning, and as a corporate and funds lawyer, the topic was a little bit over my head because it's about fintech, and digital stuff. So, as a person in the legal fraternity who does really the investment part of things, all that was quite new and fresh to me. So that was this morning. This afternoon, we are going to talk about the other side of the industry, which is the finance and the investment side. How do venture capitalists and invest their monies, and what do they look for when investing into this industry? So in our panel today, we have a good mix of venture capitalists, and we have also startups, and we have George from the InsurTech Association of Singapore. So the topic for this session is really about what do investors look for when they invest into this industry. Bear in mind that it's a new, and moving forward in 2020, how do their criteria for investment change or differ from the usual bread and butter investments and from this type of digital investments, and looking forward what's going to happen in the future. Okay, so I'll leave the speakers to introduce a bit of themselves and talk about what they look for basically in their investment criteria. So maybe for the first, I'll start with Lina.
Hello, good afternoon, everyone, and thank you for joining us this afternoon after a good full lunch. So I hope everyone is still awake. So I'm Lina Lim, so I'm the co-founder and managing director of Tempus Advisory. So what we do, so we provide an advisory services to startup, especially on the fintech and also to do with business that looking into like social good. So what we're providing a service that is actually market access and helping them build their business access into market, and also like in terms of their product. So we do also a very early pre-seed investment that is actually, we're looking on the idea that is actually really trailblazing, basically. So, and that's going to be very selective.
Thanks, Lina. Okay, maybe I'll just move on to Jimmy next first. Yes.
Hello. Hi, guys. My name is Jimmy. I'm from OSK Ventures. A bit of background on OSK Ventures. So we typically look into Series A, B stage companies across Southeast Asia, generally in the B2B space, occasionally in the B2B to C. The verticals of interest have been FinTech, InsurTech. We do have a bit of exposure from the other verticals such as HR, as well as EduTech as well. I have been with OSK for the last 7 years or so. I think it's definitely a very interesting space given how the whole style scene has been moving in the last 7 years or so itself. Yeah.
Okay, thanks, Jimmy. George?
Good afternoon, everybody. My name is George Kesselman. I run InsurTech Asia Association. So we work with a lot of insurance startups in the region and insurers as well as part of the overall ecosystem. And apart from that, I have my own startup as well in InsurTech that is about 2 years old. So I can give perspective from both the startup fundraising pains as well as the overall ecosystem, because across the ecosystem, we had a few hundred startups that are here in Asia in the insurance space. I was here very, very early, fortunately, when InsurTech was just starting in 2015. So I came out from insurance world to basically cross over to the bright side, I hope. I can also kind of give you a sense about what the startups experience has been with the fundraising.
Thanks, George. Mr. Yamamoto?
Hi, good afternoon, everyone. Yep, my name is Yamamoto. I'm working for the Japanese investment company called SBI Holdings. SBI Holdings is the investment firm. We are very much focused on venture capital and private equity opportunities. So SBI, let me brief a bit about SBI. SBI, we have two core business. The one is the investment. Other one is the digital financial services. We are providing the fund management service as well as provide the digital financial service mainly in Japan, such as the digital banking, online brokerage, and the insurance, and other financial service on the internet. The SBI presently is one of the largest fintech investors in Japan. So we are very much focused on the fintech related technology areas. And when I was in Japan, I'm also part of the venture capital teams there. My focus is very much technology-oriented investments. But today I'm based in Kuala Lumpur, so I'm already here almost close to 10 years. So since there, based on Malaysia, I'm more focused on the mid to late stage investments and the growth capital investments. So our partner is the Malaysian government, Brunei government, and also OSK Venture International as well.
Okay, thanks. I would like to ask a little bit from you. This is a fairly new class of asset, right? So for example, for Jimmy and for Yamamoto, as opposed to the classes of assets that we know and we're very familiar with, like real estate and all that, what kind of challenges do you face when deciding on investment criteria for this class? What do you look out for in when deciding on startups? Issues like this when you advise your various companies on how to invest and what to invest in this class.
Perhaps I can start the discussions on this. Again, I guess just to recap, if we look in the B2B stage of companies, but we always typically will challenge or ask the startups, whom are your customers? Generally speaking, it's not the enterprise itself, but it is the users within the enterprise. Why we say so? One of the biggest pitfalls when it comes to B2B investment is that the dealing with enterprise involves a very long sales cycle. And I think this has been captured in the early part of discussion this morning. But how do we shorten it? Generally, I guess the key points here is that we will have to understand how enterprise works. They will have layers of approving authorities. How do we shorten the approving authorities to the lowest level possible, perhaps? Which means then your key users are the users in the organization and not the organization itself. If we could break down the functions and appeal to the selected users, you could shorten the sales cycle very tremendously. So that will bring to the next stage of discussion that we have with our startups as well. Now that you have optimized the sales cycle, how about the conversion and whatnot? In general, I do not think it will be much different from a B2C play. But B2B, I guess the pitfall is that we are dealing with a lot of founders who are very much product guy, who does not have any prior experience in dealing with banks or even from the procurement or IT integration perspective. And I guess I was also very fortunate to speak to Lina briefly earlier that she also shared the same sentiment and how Terminus could help solve some of the very early stage advisory where a good product requires not just the right fit, it requires the right distributions towards the right targets within the organization as well. If I could then sum it up, we will always challenge the startups to try to reduce the approving authorities to lower level possible and not involve too many different departments to begin with. So any infrastructure play, that will be quite a tough ask for us. We may prefer to look into a specific product or SaaS for starter before that startup could scale and starts launching infrastructure products for their banking clients, perhaps.
Mr. Yamamoto?
Yes. Talking about as I said, I'm now based on the here and the more like mid to late stage. We are always looking at the taking the basic approach. We are looking at the markets, the business model, the technology, and management teams. But in Japan, on top of that, we are really deeply looking at the technology or the business model can really work in the real business or not. One of the unique approach we are taking in Japan, as I said, we have a business teams and we have investment teams. When do investment committee meeting, we usually invite business people for discussions. And we introduce the technology into the business platform. Our business team use the technology in the real world and see it really works or not. Then we will make decisions. This is one of the things to reduce the risk of the investment, as well as we can really, I think, helpful and practical advice to the venture companies. Venture company is actually going to face a lot of issues, not only about business, the human management, and also the organization as well. So we want to try to help the business as much as possible. This is the approach we are taking, and also the way to reduce the investment into the risk to technology startups.
Thank you. Lina, you have an interesting background. Maybe you could share with the audience a bit about, because you're both a startup and you're also advising startups, right? Yeah.
Yes. Yes. So we come in from a team of an expertise that coming from the financial market and financial and capital market. So it's been quite an interesting journey for us as well. So we consider ourselves a startup as well, but on the same time we're actually working with the startup. So, but while we're looking with the startup to partner with us, which actually not only just to build their idea into something that is actually work. But we want to see the sustainability, then what is actually their long-term execution model. So Yamamoto-san mentioned about the business model. That is very important as well. And Jimmy mentioned about like understanding, like especially on the B2B, which is like most of the startup that we're working actually looking into the B2B, into the B2B business offering. So especially in the financial market, is a very highly regulated market. So we actually then have to work in collaboration and a lot of interaction coming from the regulators and the existing market players, and how they're actually that product business solution could actually be embedded within that. So our approach is not 100% trying to disrupt. So a lot of the business that coming with an idea to us saying that they want to build something that actually disrupts. So I always ask what your disruption definition means. So because in the financial market, financial services sector, so we're highly regulated. So the best way in our experience to work is actually to actually collaborate and then building the right, what we call the right plumbing. How we can connect the right plumbing between your product or your solution into the existing market. Because the current business challenge and business problem, there are a lot of gap in there, and where we see that a number of like fintech that coming from the idea of like solving those problems can actually fit in within that.
George, you want to share some comments because you're a startup, and maybe just a bit of what you went through.
So I think the comment that I'll start off first is to your question about what is the difference in asset classes. What we see is quite clear that there's a difference between early stage investment and later stage investments, like private equity as it kind of gets to the later series. So early stage investments, very much like a farming. So you place a seed, you nurture the seed. There's a lot of very close interaction between the startups and investors. There's a lot of different changes in a startup. Kind of the topic of the session is from idea to what's next. It is a very non-linear journey, and most of the later stage investors are kind of like, it's more like a trade type of deals where you say, I've invested $20 million, and then the valuation is going to multiply based on that. It's much less of those kind of ups and downs. So, and this is very important because if the later stage investors try to come in and try to invest in the early stage startups, there is a kind of a natural mismatch that happens where they start to apply a lot of the mechanisms of, you know, how many multiples are you going to deliver to me next year versus the kind of a nurturing component that comes in. And we've seen that happen in the regional ecosystem where there's a lot more investors that are comfortable with later stage investments. And there is a process of learning and cultivating that kind of a knowledge of farming and working with the startups as they go through that early journey of, you know, ups and downs. What's interesting is that we've also had interaction with US investors and European investors, and there seems to be a lot more knowledge inherently already present there when it comes to the investment in the early stage startups. And having seen probably a few of those materialize into exits, there is kind of a natural tendency to understand there is a lot of instability in the early stages as well.
Okay, so I'll just ask again, for the VCs here, how important is the fact that startups have a regional footprint or an ASEAN footprint? Maybe you could just talk a little bit about that, because this is fintech, so it's very often cross-border and it extends to a wide area. Comments on this?
Perhaps I could also add a bit more comments to what Josh has mentioned earlier on the different style of the VC investment before we move back towards the regional footprints as well. It's a rather interesting point on how Josh had mentioned slides the type of investors to those that does just early stage and the late stage. Primarily because I think based on what we have seen in this part of the world as well, a lot of the VCs are very much structured where it requires proper documentation for them to justify investment. So for a very much early stage investment, the flair as well as the founder's ability to execute the business plan forms a big component of the decision making. But imagine this, putting this down on paper, I like George's way of management and whatnot. That message being put on the paper is kind of lost in translation when it's being escalated outwards to the investment committee for approval. So in a way, there is a bit of room for development. I think where we'll see potential growth will also be how the late stage VCs could then share with the early stage VCs what they are looking for and vice versa. So these continuous dialogues will definitely help a proper value chain within the VC fundraising perspective. And moving on towards the regional footprints is that a bit more background on Oscar Ventures. A lot of I guess stakeholders are asking us why we do not have strong or meaningful investments in Malaysia, whereas predominantly most bulk of our investments are located in Singapore. The very fact is that most of these startups doing B2B business, they are catering to their regional clients all along. By focusing on just one single country, they will not have the scale as well as the depth to grow. Which is why I think that the key ingredients here is that it's not a question of should they go regional. The question is they should, but the right question obviously, can they go regional? Generally, our exit depends on how well these startups are able to scale regionally. And I think this is also where I guess some of the Malaysian entrepreneurs are doing quite well, where in the sense that probably the spirit of entrepreneurs from the 90s and whatnot, all these entrepreneurs from this era has been able to navigate the demographic as well as compliance requirements from our regional countries very seamlessly. Whereas if a startup is not willing to break things, meaning, to most extent, I guess I have to throw our southern neighbor Singapore into the picture right now, where being too adverse, too compliant, and not willing to break things or move or navigate in gray areas can be seen as a drawback as well. So I think we generally will see the jockey of the startups, can they navigate the Southeast Asia's unique regional requirements? Each of these countries will have various different barriers to entry and different mode of partnerships as well.
Yes, thanks for that. This may be a good time for me to bring up two questions which is related to what you just said, and which I would like to ask VCs here to comment on as well. Regulation, right? So if you're talking about investing into the region, we have different regulations in different countries. The Philippines is very different from Malaysia. Malaysia is highly restricted. Cambodia is not. And how do you, can you share your regulatory challenges when you, this is for the VCs and the startups, can you share the regulatory challenges you face? And do you think that startups should have a lower level to cross in terms of regulation as opposed to companies that are licensed and should be regulated?
Yeah, I can start. So with your regards to the second part of the question about the different treatment and regulations, I don't necessarily think that there should be a preferential treatment of startups. Startups are inherently a business, and as a startup, the big advantage is that you are more agile. To Jimmy's point earlier about startups inherently agility plus ability to challenge the status quo and find solutions is its advantage. So if it's not able to navigate current landscape of regulatory, it sees it as a barrier to entry. It just means that it's not working hard enough, basically. So there is no such a thing as a kind of perceived regulatory mode. People say, okay, there's a requirement to be a bank. This is a requirement for big capital requirements. Therefore, I cannot be a bank. Well, maybe you shouldn't be a bank in that case, right? Maybe you should find another solution for it. And that's what we've seen. Like, for example, for InsurTech, regulators are generally open to the idea of innovation, and they're encouraging. So they're not saying, stop, don't do it. You say, do it prudently, don't break anything, don't take advantage of people. If you meet, and that's a fairly low hurdle to meet, once you meet that low hurdle, you as a startup have an advantage to move faster, to basically bring something to market and show regulators, show public that there is a significant value. At that point, when there's inevitably, as the startups will grow, there's going to be more regulatory questions to say, oh, are they doing something that is not allowed to do for corporates or for big entities? And if there is a level playing field to start with, there is not going to be something that can be taken away and then basically destroys their business models.
Okay. I agree on what George was saying. So I just, perhaps I'd like to share. So currently I'm working with a fintech startup that's actually looking for creating a fintech market infrastructure. So they're based out of Dubai, and then they're looking into coming into this market. So where it is they started in Dubai is actually quite interesting because that, as George mentioned, regulator is never stopped when people come with the innovation. No, the regulator actually love and open for the innovation. And what is actually that we're working with the Dubai, which is like the Dubai International Financial Center, the IBFC, so they have a very, very warm and open welcome environment to actually work on the idea, and then they're actually not only becoming like the regulator, they're actually acting like a mentor. So they're providing guidelines and they kind of helping them to actually looking into like the gaps within the market where fintech, like some of the fintech players, the startup can actually play. And this is where I'm actually quite pleased like what is Labuan as well doing, So jurisdictions such as like Labuan Financial Center could actually becoming the bridge to some of the other regional market here that we can see is already much more established, Malaysia, Singapore, Indonesia, which everyone have their own take of like regulation play for the fintechs. But like what Labuan is doing could actually then promoting this sort of startup ecosystem that they can actually then scale and then actually then work into like the more, we call it like a mainstream market. So that's how I see it.
Yes, thanks for that. Mr. Yamamoto, comments to share on this?
I fully agree with Lina and Josh. Of course, the less regulation is better for the business, I think. But the regulator has a different point of view. They have to protect the public interests. So I understand. And basically, the regulator in Asia is very friendly, as Lina mentioned. Rather, they are mentor. We can, if we email to them, if we call them, they can easily make appointment with me. So very good.
And you have been in Malaysia for, what, up to 10 years already, right?
Close to.
Close to 10 years, yes. A question here is, do you think the government, and I think the question is geared to, targeted towards the Malaysian government. For those of you here who have Malaysian experience and investments, do you think the Malaysian government is doing enough to support startups?
That question directed to us then. I would have to say generally yes. In fact, not generally. In fact, we are seeing a lot of incentives coming from the various agencies. Let's not mind the conversion. Obviously, given the exchange rate, that's something that we can't help. But the push factors and the various agendas that's being put in place, we cannot say that there's nothing being done or it's not enough. So in summary, if I could summarize it, that we are seeing a lot of incentive on the ground, especially for the startups and entrepreneurs, the grants and the co-matchings and whatnot. It's not any lesser than what we have seen regionally. This, I guess, we would have to categorically or officially put it as such. So I do not think Malaysian-based startups are in any way disadvantaged when it comes to grants or helps from government. So this is something that we try to correct every now and then, as and when we see someone who had a differing views from us as well.
Okay, thank you. Okay, I'd like to talk a little bit more about impact investments, right? So maybe your comments on how this industry, how can this industry work with that? I mean, how important is that when you consider your investments?
I'll start. Yeah. So it's one of my favorite topics. So impact investing. Well, I like to address it this way rather than saying impact investing. Why don't we say that investing with impact? You know. So I mean, like, it's an investment. At the end of the day, it's an investment. So so it is very, very key and becoming much more, I would say, mainstream. So I think earlier this morning session, one of the panel mentioned about like ESG. So companies and in the startup ecosystem community, so we see that there is a lot of appetite that they want to actually solve the problem, but not just the problem that is actually for themselves, but it's actually they're looking more into what is actually the social aspect and community problem that they solve. So in this space, FinTech has a huge opportunity, which is like it's already around financial inclusion, access to finance to those that is actually what we call it unbanked or unserved market. So there is actually a lot of role that fintech startup that can actually play into that. Financial inclusion is one thing. So not only just the unbanked, but it's also there are actually market that is actually they're being unserved. Those actually can be looked at. Even wealth creation. So this is my own opinion. So capitalism that is actually to create to do a wealth creation actually has been until today is actually create a lot of inequality in terms of wealth distribution. And this is where we see that access to finance becoming difficult, which is like for certain group of community, they not be able to access finance. So FinTech bringing a lot of like solution that actually can bridge those. And then again, so the most important thing is always working with the relevant regulator, because like I said, I've been in this industry for the last 25 years, so it's a very highly regulated market. At the end of the day, customer protection is very important. So that's why impact investing is something that is actually becoming like a key play in terms of like where I think the movement is actually now.
Yes. Yeah, right. Establish the better society is everyone's benefits. SBI Group, we are always looking at the impact effect from the business of the investee companies. So talking about the fintech space, as Lina mentioned, like the P2P lending, equity crowdfunding, the payments, remittance solution for unbanked or unserved people. This is one of the areas we can call the impact investments. And just share with you one of the examples. This is a more like middle stage companies investments. We have made one investment into one company in the regions. The company is helping the fishermen in Indonesia. In Indonesia, there are a lot of the small fishermen's village, but their life is really depends on the fishing volume. Sometimes much, sometimes a little. And they are, after the fishing, they just sell the fish. Or maybe some fishing association, they have a huge fridge in the village. They just freeze the fish like stone and sell to US or Thailand for the food stuff for canned food. So sales price is very low. And talking about tuna, it's just like US dollar, two US dollars per kg. And the fishing volume is very volatile. So we made an investment into the one company. The company is providing the man-made fishing island in the oceans. So fish always gather there. We allow the fishermen to fish there. But the fishermen have to sell the fish to the company. And we establish the fishing process in the village. So we bring the Japanese technology together with the Japanese technical persons. They teach Indonesians how to cut the fish, how to keep it. And now the company start exporting the tuna to Japan as a sashimi. Sales price is almost 10 times. Yeah, and their fishing volume become more stable, their income level is higher, and another thing is, as I said, we set up the facility in the village. It creates the job opportunity for women in the village. Before our investments, the women in the village, they are basically stay at home as a housewife, or else they do small farming behind the house. But now they have a job, they have a monthly income. That is the part of the impact investment in SBI Group.
That's excellent, right? That gives new meaning to the term, if I say it rightly. You don't give a man a fish, you teach him how to fish, right?
That's right.
Okay. So that's on the impact investments questions I wanted to ask. One more topic which I want to cover before our time runs out here is, as VCs and startups, you need a house, right, to fund your fund, to put your fund in. May not be such a big question when you first do the business and get into the business and all that, but eventually you need to find a house for it. So for lawyers and VCs, that would be, where is the fund domicile, and how important is the fund jurisdiction for you when you decide on a fund domicile?
So I guess these questions probably can be answered from two perspectives. But the easy one would be from, say, startup perspective then. Typically when we are an investor, existing investor in a startup, we may be approached by various early stage VCs who are keen in the startups as well. But once we move deeper into discussion, we realize that, hey, a lot of their funds are domiciled in offshores who, with grey or unknown funders. So given that, I guess from our perspective, we are a publicly listed companies, we are probably a bit more prudent and careful when it comes to whom our investments or whom our investing companies receive their funds from. As and when we cannot establish the source of funds, this becomes a problem for us. So coming back to questions on whether the source of funds or the house or structure itself, our preference would be something near shore. Say Labuan, for example, is like, typically we want to guide people that if the tax incentive and whatnot is something you are gunning for, then it's probably better to look at something, at options like Labuan, because any further and offshore entities will probably obscure who are the funders behind it, and lacking such clarity pose a problem from us from compliance perspective. Whereas on the other side of the coin, from a VC perspective, then I think first and foremost why these entities exist is mainly to help cater and making sure that all this fundraising are tax optimized. So first and foremost is tax optimization, and if this could be solved in something that's closer and less complicated, that would be our preference as well.
maybe from the rest of you in terms of this question about where to place your fund?
Well, for the startups, we're Singapore-based startup, so far it hasn't been a real issue for us. I think as we expand across the region, the hub still will remain in Singapore, and it kind of makes sense from a lot of standpoint. So from an investor standpoint, we haven't had any issues. As we've seen on the ecosystem side, we haven't seen that was a big hurdle, because most of the startups will just domicile themselves in a particular country. The one that we came across a year ago or so that had issue was because they were coming to Asia, but they were actually HQ'd in Ukraine. So they did have a lot of issues associated with traceability of funds, who were the initial investors. So I think they said that they spent something like $60,000 on the legal fees just to go through all these hurdles to clarify everybody and stuff.
Well, from our perspective, like we're looking for a jurisdiction that is actually really one thing, as Jimmy mentioned, is tax friendly. So again, we're looking for where is actually the regulator themselves is actually more kind of like there are a lot of like support from the regulator to harness that. So that's where we see that where if we are looking to actually set up something in this region, for example, like the Labuan is really one of the jurisdiction that we're considering. Opposed from Singapore, I think Singapore has been looked at from across the globe in terms of like in Asia, in ASEAN and Asia is one of kind of sort of like quite easy to navigate. Yeah.
Mr. Yamamoto?
Yep. When we set up the funds, yeah, we look at the domicile from the various angles, but basically from business perspectives, like everyone said, the highlighted, like the cost, tax incentives, and also the transparency and the stability of the regulation frameworks, and also the speed to set up the fund or either SPV. That is the one thing. But another thing is since we are handling the financial projects, always our another concern is the kind of the liquidity among investors. So that's why how familiar, how popular is that domicile to investors? This is another concern. Because investors, usually they don't want to pay additional costs for tax DD or legal DD if they don't know about that domicile. Yeah. So if we set up the funds, so we always have to listen to the needs from the investors. So if that place is unpopular place, the customer clients ask us to rethink about the domicile. But in this sense, Labuan is, I personally feel that Labuan is already very well recognized, especially in Asia, together with Singapore. I think that thanks to the government's long-time strong support. So as a SBI group, so far we have registered 3 private equity funds in Labuan.
Yeah, I think generally speaking, for us in this sector, advising investors and VCs, you are looking for transparency, a clear framework, a clear legal framework, clear guidelines on how to set up a private fund, licensing for fund managers and things like that. That would be quite key. And most jurisdictions today will have to comply with OECD standards of compliance and KYCs and AML anyway, right? Okay. I think I've just got a couple of more minutes left, so maybe just to end off the session, just recap a little bit and give me maybe your top 2 or 3 considerations when you invest in startups. What are the 2 or 3 key considerations when you want to invest in fintech startups?
Justice is a secret, but that aside, I guess we will typically guide startups to provide us the metrics on the sales cycle and the conversion, because ultimately at the very early stage, once you have done the prototyping, once you are fairly certain that the product fits the market, then it's how fast and how quick and how deep. Generally speaking, a lot of startups will then provide us Excels. Then from our perspective, we will have concern, how do we verify the raw data, right? Josh did ask, like, what would we do then? So we typically ask pre-A startups to then start approaching us. Let's have a dialogue. We'll let you know what we are looking for. First and foremost is the metrics. Capturing the metrics is one thing, but making sure that the metrics presented to us is accurate and not tampered with is another. We will typically guide them to start sourcing for some form of CRM tools that could give us a very quick and very insightful access on very granular details, even or dependent period that I choose. So first and foremost is the conversion and sales cycles coupled with the use of a CRM.
I'll give you a little bit of a contrarian view. So I would say that from an investment standpoint, the thing that matters the most is the relationship between a startup and a VC. You'll hear otherwise, you'll hear a lot of things being brought in, like numbers and everything else. But in the early stages to middle stages is very much about the relationship, strength of the relationship between the VC and the startup. And the more the VC believes in it and they get excited about it, they get sold on the idea of investment and they invest, and then they work closely with the startup. I think that was our learning from many startups and ourselves as well, where we came in with a very mindset of, we need to deliver numbers and you get asked for more and more numbers, but at the end of the day, what the investors are looking for is really for you to sell to them the vision, the excitement of how this is going to change the world.
Our experience, as George mentioned, is the relationship. Yes, to start with, then you start with people that, we started with people that so not that someone that is actually not understanding us and what is, and then the first thing is it's about communication and easy to discuss things. But it's also commitment. So I think it's very important as well. So I mean, like, everyone comes with a great idea. So, we do help, like, really someone with the idea that they have a great, so but when we start about their commitment and then what is actually their, is it really their part-time job just because they're, they have an idea here, it's great, so I want to start something. So it's very important because that is actually, for us, it is important to actually to have the trust of that startup that you are going to be. At the end of the day, it's about, like, people, so the business, yes, is something that is going to build, but the people, if we can trust the people that we're working with, so that is something that is going to be quite challenging to move forward on the next step.
Yeah, I also think the people, the management team is very important for venture companies. So, of course, from the venture capital point of view, we need to look at the numbers. This is a part of the process. We can't close the eyes. But in reality, actually, that number doesn't guarantee anything in the futures. Always the business plan, the venture companies change or update it. Actually, 3 years later, entirely change. Maybe sometimes they are doing different business. But always, we have to have a trust. So we rather want to see the quality of the management teams. This is a very important part, I think.
I have just one more question here. I just asked one last question of them. Just one more question, guys, since you're all here. Okay, do you see any collaboration between ASEAN regulations around tech innovation? ASEAN collaborations around the tech innovation?
So far, from a regulatory perspective, I think there's beginning of the dialogue. When I first started in 2015, I would meet with the regulators in each of the countries because they were also trying to learn about InsurTech, how they should be thinking about it. And I would always throw this question of, have you talked to the other regulators? And the answer is inevitably no. I think that has changed. I think there is more inherent dialogue between the regulators because they realize that regulating innovation is very different from regulating your domestic companies because innovation is very much inherently a cross-border exercise. So if you don't sync up, you become, in some ways, instead of facilitator, you become a potential barrier. And they, as the regulators, don't want to be the barriers. There is more open dialogue. I think it's still a lot more work to be done, definitely, but it is quite promising.
Okay, I think that's it. Yeah. Thank you very much. Thank you, speakers, for this, for sharing your thoughts. Thank you.